Welcome back to our Home Buyers Conference. I'm Sonia Blake, President and CEO of the Valley Economic Alliance, and it's my pleasure to welcome you back. For many years, the Valley Economic Alliance has hosted this event as a way to educate the community and really bridge the gap on generational wealth. The real estate market has opportunities even in the current climate. And so education about home ownership and investing in real estate, grants and loans and opportunities available can be a very helpful way to improve our local economy and benefit the residents of the whole area in Los Angeles communities. So right now I'd like to recognize our sponsors, our presenting sponsors, Boston Private and Bank of America, our panel sponsors, HSBC Bank and SB Realty, as well as our community partner, Ventura County Community Development Corporation, and our media partner, San Fernando Valley Business Journal. We thank you for your partnership. And in a few moments, we're going to begin our second panel of the series. Before we do that, I'd very much like to introduce our presenting sponsor, Kerwin Esperias, Area Lending Manager from Bank of America, to say a few words before we move on to our second panel. Kerwin?
Thank you very much, Sonia. It's a pleasure to be with everybody today. It looks like we're still having lots of participants being added to the call. So I want to say, first off and foremost, thank you for everybody who is joining. You're really taking a big step forward in learning more about home ownership, investing, and creating long-term wealth. I'm proud to be a sponsor of this event, and really I wanted to take this opportunity to let everybody know about a commitment that Bank of America announced last year. And last year, Bank of America announced a $5 billion community homeownership commitment. This specifically addresses some of the most common barriers that folks have towards homeownership, specifically down payments and closing costs, which I know can be huge barriers for entry into a home. So again, just wanted to let everybody know Bank of America is committed, and we're putting $5 billion behind that commitment. My favorite part of the commitment really revolves around two grants that we are issuing. And these are grants to help people get into homes. It doesn't have to be your first home. You don't have to be a first-time home buyer to qualify for these. But we have two different grants. One grant is called the America's Home Grant, and this is up to $7,500 towards non-recurring closing costs. You can also use this money to buy down your interest rate to make your monthly payment more affordable. The other grant that Bank of America is offering, and I'm so proud about, is our down payment grant. So Bank of America is giving 3% of your purchase price up to $10,000 for folks who qualify for a down payment grant and qualify for both. So you can get up to $17,500 in down payment and closing cost assistance to buy your home. Again, this does not have to be your first home, but it does have to be your primary residence. There are income limitations and there are restrictions as far as locations where these homes have to be to qualify for these grants. With that said, if you have any questions or want to learn more about these or how to qualify for these grants, you can reach out to your local B of A loan officer. Our contact information will be sent to all the attendees afterwards. So if you want to reach out to us, we'd love to share a little bit more about our grants. With that, again, thank you for everybody who's on the phone, everybody who's on WebEx. You're going to get a lot of great information this afternoon about creating wealth for you and your family and creating a legacy of wealth. So with that, I will pass it over to our moderator for this panel. So Ms. Renee, it's back to you. Thank you very much.
Thank you, thank you, thank you. The phone is going in and out, but hopefully you can hear me. We'll be discussing purchase in investment properties, line of credit. And isn't that amazing? We will be learning what options we need when it comes when we come in to get to understand the different ways to utilize the equity in your home. Also, lending and loans that the in and out of purchasing a second property. So we got some exciting coming aboard. The first panelist we're going to introduce is Yadira Hernandez. Our second panelist is SB Abedini, and Cosby. So a great shout out to all you guys. I would like to first thank you guys for coming. Gerald, please tell us a little bit about yourself, Bank of America, your background, and your experiences. Okay, can you hear me, Karen?
You're there. Are you on?
Yes, I'm on.
I can hear you, Renee. Karen can hear you.
Okay, Karen. Okay.
There.
Yes.
We'll go to Karen since she's on because it seems like the jet was frozen. So Karen.
Okay, so for you participants out there, you can tell that we're having a little bit of an issue with Renee's with Renee's internet connection. So I believe she wants me to introduce myself. I'm Karen Crosby, and I work with Finance of America. We are a nationwide direct lender, and I've been doing this for 35 years. I've funded over $2 billion in loans and over 4,000 transactions. So I also own investment property. So it's actually a good panel for me to be serving on. And one of the things that we want to do as experts in this arena for you today is to give you some information and guidelines of what you can, how you can obtain financial security with investment properties or different types of financing available depending on what your needs are. Reverse mortgages are being talked about. Lines of credit, does it benefit you? Does it not benefit you? So those are things that we want to talk to you about. So I know that Renee's now back on, it looks like. So I'm going to go ahead and anyway, Karen Crosby, Finance of America.
You're there.
Yes, I'm on. Is it my turn? I'm sorry, I can barely hear you. So my name is Yadira Hernandez, and I'm a financial lending officer. I work out of a financial center in the city of Northridge. I've been with Bank of America 14 years, so I have 14 years of mortgage experience. Most recently, I've been in the origination for the past 3 years and a half. But prior to that, I was working on the servicing and foreclosure prevention. I have, I was part of a travel team within Bank of America where we traveled through all the United States, assisting customers face to face to assist them in getting out of foreclosure. In this event, we had our investors, Fannie Mae, Freddie Mac, which made the process much easier to assist these homeowners. And that's where I became really passionate about mortgage and, the importance of the American dream, So now that I'm doing originations, I do it with the same passion as I did when I was assisting those homeowners that were getting out of foreclosure.
Next, I would
Renee,
like to
do you
go
want
to
me to go ahead?
Abedini. Can you hear me?
Agbayani. Yes, yes. Yes. Hi,
Abedini.
I'm SB
Sorry about
Agbayani.
that. So
And,
SB, please take time to tell us.
Okay, thank you. Yes, looks like I'm the only realtor here, but I just want to let you know that I've been a realtor since 1988, and for more than 14 years, I have been working as a mortgage loan originator and also a real estate no wholesale lender, representing different calling on different brokers and showing them how to help their clients on getting the loan for their borrowers. So it is really exciting because during the time of the 90s and early 2000s, I was representing buyers on how to get their loan, coaching them on the best program that they have. And then from there, after I listen to what they need and they listen to what I coach them, then we go ahead and make our offer to the different homes that they want. So for the last 30 years, I've been doing this, and in the different seasons during the 90s, early 2000s, where the market was really down, I was also helping in short sale. I became a short sale specialist, and now that we are in this situation, I am also adapting to the new situation we have, where there are so many seniors who are retiring, and they don't know they are cash poor but equity rich. So I have just gotten my certification for as a senior specialist, and I promote retire in style, how to leverage your equity, especially if you are 50 and over. So I do a lot of workshops and talks about how to combine reverse mortgage, Prop 6090, and also 1031 exchange if they have other properties, so that they can retire in style by the time that they turn 60. So that's what I do. Thank you.
Okay, well, thank you for that great. Yadira, and definitely ask some questions about the different loan package that. Hello?
Yes, for sure. So there's no secret. Hello? Yes. So there's no secret that currently our rates are still historically low. So definitely for those homeowners that have mortgage, always come to a professional, have your mortgage review, and let us take a look at it. Let us see if there's anything that we can save you as far as, lowering your payment. Maybe we can lower your interest rate or reduce the term of your loan. In Bank of America, we offer different products. On our fixed rates, we offer terms as low as 10 years, 15 years, 20, and 30. And we also offer our adjustable rate mortgages. There's different benefits when it comes to refinancing. And, of course, one would be to assist you in lowering your mortgage payment, lowering your interest rate. We can switch you from a adjustable to a fixed rate, reducing the term of the loan. We can also assist you in doing a cash out to pay, other debts, or, if you have like a big expense, the cash out will be a great option. In addition, through our affordable lending products, we also offer a refinance where we can remove the PMI for those homeowners at 97% loan to value. I believe earlier my other colleagues spoke about those programs, and one of those is the refinance. So if you have customers that currently have PMIs, they don't need to wait until they have 20% equity. They can actually reach out to a professional here in Bank of America, and we'll be more than happy to review their mortgage and see if we can remove the PMI. That's a great program. When it comes to our line of credit, we have a great product for our line of credit. This program, it's having free access to the equity of your home. There's no closing costs, so applying for a home equity line of credit with Bank of America, it's completely free. And the funds for the line of credit can be used to refinance debt consolidation, to do any home improvements, and you can actually use the equity in your primary residence for the purchase of a second home or investment property.
Can we use that type of money for refinancing to purchase an investment property?
Correct. The home equity line of credit, you can buy, you can use that equity to purchase a second home or investment property.
Can you use the money for refinances to purchase investment property?
Yes. You can use the home equity line of credit to buy an investment property.
Interesting. Okay, Karen, are you on?
I am.
What do you have with, can you hear? Okay, what different, differently?
Renee, your internet's cutting in and out. Can you repeat that?
The question is, what different finance programs currently? Can you hear me?
Every other word. So I think you're asking what type of programs do we have for refinances?
Yes, that's what she's asking.
So pretty much Finance of America is going to offer what any of the banks are offering, what any of the other lenders are offering. The difference is that on a refinance, you need to make sure when you're doing a refinance, we're looking for what your equity position is. We also want to take a look at what your current interest rate is and what your current monthly payment is. And we want to do a break even on it to see how long it's going to take you to recover your closing costs. We're going to walk you through step by step. If you have a $70,000 loan, sometimes it doesn't make sense to do a refinance, even if the interest rate is 2% lower, because you're already so far into your loan. So every transaction is handled differently. We can refinance investment properties. We can refinance second homes. We can refinance owner occupied. It depends on your equity position, what your credit position is, and your income position. So I'm not sure, Renee, if that's what you're asking. We have adjustable rate mortgages, 30-year fixed. 30-year fixed is actually the best option right now for most people. The interest rates are very low. So based on all of that, again, I'm not exactly sure what you're asking me, Renee. Is that what you're looking for?
Yeah, that's definitely what I was looking for. What offered for refinancing. So yeah, that's definitely the question. Thank you. Ask her about, share a little bit more about the reverse mortgages and how a reverse mortgage for our seniors.
Thank you. So, well, you know, we have 10,000 seniors, that the baby boomers that turn 65 every day. And most of them are not even ready to retire. They don't have really a lot of money. But a lot of those who own home, they are maybe cash poor, but they're equity rich. So that's the reason why I would like to talk about the reverse mortgage. The reverse mortgage, it allows an older homeowner, 62 plus and over, to refinance their current home or to even buy a home. So with me as a realtor, what I wanted to chant here today is to sell your home that has a big equity and then buy another home that is more suitable for you. Whether you want to upsize or you want to downsize, you can use a reverse mortgage. So the idea is that you sell your home, you take the equity of your home, and then you can put, like, usually they require you from 40 to 60% down payment. And with that, you are going to eliminate the mortgage payment until you exit that home. So that's the good thing about it, because you have a cash flow. So for instance, I have an aunt who bought a house in the 60s in Mountain View. So she bought their house for $20,000. And now she's 96 years old, and the house is free and clear, right? And the value of the house right now,
Yes.
don't be shocked, it's 2.3 million, right? So what she opted to do is to stay home because she has a nanny that stays with her, a full-time caregiver, but she needs some cash flow. So with the reverse mortgage, she was given $10,000 every month. Plus, because she has a big equity in her home and she's 94 years old, she was given also a revolving credit, an open, an equity line of 300,000, so that she can use that for any reason in case she has an emergency. So that's the good thing about the reverse mortgage. Now, if she sells the house, she would have a 2.3 million equity, right? And taken all the taxes and all the expenses. Let's say she uses 2 million, she can buy a condominium in Mountain View for maybe about 800,000 and can put only 400,000 down. So the remaining can be an additional money that she can put in aside and use the way she please. She can buy an investment property, or because of her age, she can just put that on an interest-bearing account that is like a guaranteed income for 4 to 6%. That kind of thing. So that's one thing good about the reverse mortgage. You can use the equity that you have
So on the
remaining
reverse,
after you have bought your house.
so there's no age limit on the reverse mortgage?
There is, you have to be 62 and over. So let's say a couple will be selling their home and then buy the replacement home. At least one of them have to be 62. So if the wife is like 50 years old, it's still okay.
The question is,
The
on a
husband will
reverse mortgage,
qualify.
is there
There is an
so
age
is there a cutoff
requirement.
for age in order for someone to refinance, to go into reverse mortgage?
No, my aunt was 96 years old. They love it because her lifespan is shorter. So it's better, because the good thing about reverse mortgage is that you don't need FICO score. You don't have to qualify. What qualifies is the home. So the most important thing is that the collateral, which is your home, has to be taken care of, has to be maintained. You have to pay the taxes and the insurance. So once, if you fail in that, then you can go into foreclosure. So the good thing about it is that you will have a cash flow. You will free that money that is sitting in your home, and you can actually buy a more suitable home for you, a newer home, a less tired home that needs repair, and you can use the equity the way you want it.
Got it. Thank you so much. To Karen, I don't your current interest rates on your refinances, and what loan of value are you looking for?
You know what? That's a question that you can't really answer as a blanket. Yeah, you can't really answer that as a blanket answer because it depends on your credit score. It depends on your loan to value. It depends on if it's a single family home or a condo. If you have 75% or 25% equity, your interest rate's going to be better. Depending on your loan amount, if you're in Los Angeles County and you're doing cash out on a loan amount over 510,000, you can go up to 765,000 and still call it a non-jumbo loan. But there is a pricing hit of 1%. So no matter what, off the bat, you're going to do cash out refinance, that interest rate's going to go up, or you're going to pay points to get that same interest rate. So that's actually, you can't actually give a specific interest rate quote. It's probably, depending on credit score and loan to value, you're probably in the 3.25, 3.3 range is where we're looking. So it's really has to be done individually on something like that.
When you mentioned credit score, is there a max credit score that you guys are looking at so people don't have to even bother if you?
Again, it depends on the loan to value on property type and what you're trying to accomplish. Most programs want at
Okay,
least a
so-
620 credit score. Some require a 700
Thank
credit
you.
score, some require a 720.
Thank you. You say a lender common requirements for funding an investment property.
Requirements
Do you
for
hear me?
financing an investment. Yes, can you hear me? Yeah, so yeah, I can hear you. You asked what the common requirements, right, are for funding an investment property. So the requirements for financing
Correct.
an investment property really depends on different factors. Definitely, we need to review the client's income, work history, their credit, and their savings. How much they have for a down payment. For an investment property, typically we're looking for a 20% down payment. FICO score can be 680 if you're doing your 20% down. And as far as the income ratios, we're looking at 45% debt to income ratio for this investment properties. Now, as far as what other documentation we're going to need, once again, depending on the type of income, if you are a wage earner or maybe self-employed, we're looking for tax returns for 2 years, W-2s for 2 years, bank statements, to see if you actually have, the down payment for that 20% for the closing costs. We're looking for 2 months of bank statements, 30 days of pay stubs. Other information you're going to need when you're buying an investment property that we need to take into consideration are the expenses for any other properties that you own. A lot of times, even if you have a property that's already free and clear, it's already paid, we still have to take into account any property taxes that you're paying for that property, any insurance, or any homeowners association, if that's applicable.
Hold on a second. Karen, can you share some challenging stories? Hello?
There's always a challenge. There's always a challenge. And that is every single scenario is different. So recently, a lot of people have been coming, they want to refinance to take advantage of the lower interest rates. But due to COVID, either their income has been cut, that they're making less money, or they've lost their job, or they've been furloughed, depending on what company they work for. So right now, a lot of the refinances have been more challenging than others. They're asking, hey, can I use my unemployment? Well, you have to have a history of getting unemployment, right? If you're in the entertainment industry, unemployment is very common. Depending on what type of work you do, if you have a history of unemployment, we can actually use unemployment. If you don't have a history of unemployment, we cannot use what you've been getting for the past 5 or 6 months. So there are a lot of challenges with refinances right now for people who especially are self-employed. They're looking for more documentation to show that your business has not been impacted. They're asking for paycheck stubs continuously throughout the entire process to make sure that when we verified your employment today, you weren't furloughed or cut loose tomorrow. So based on that, with regard to, is there a challenging story of a client? everyone's a different puzzle, but we've certainly been running into a lot more challenges due to COVID than we have in the past. Also, we're looking at their loan to value. If they purchased a property for 500,000 and it's still worth 500,000 and they only put 5% down, they can't get a cash out refinance. They can certainly lower their interest rate and take advantage of lower rates as long as their job has not been impacted or their credit has not been impacted. And like Yadira said, they can come back and they can actually do up to 97% without mortgage insurance based on one of the B of A programs that are being offered out there. So there certainly are
Right.
challenges in every aspect. And on a refinance, they do not have to take equity out of their property. We call it a rate and term refinance. So they're reducing their interest rate and they're just lengthening the term or shortening the term if they're going from a 30-year to a 15-year, or if they're trying to lower their payments and go from a 30-year to from a 15-year to a 30-year. There are all different kinds of things, but when you're refinancing, you do not have to take cash out. You can actually do what we call a rate and term change of your loan.
And loan. Reverse mortgage.
Yes, hi, thank you, Renee. So if you are not a senior yet or a baby boomer, you can still do an investment property. There are different ways of buying a property for investment. I'm sure that you've heard all these people who are talking about flipping homes and no money down and all that because it's rampant, especially here in Los Angeles. So it is important that you research and you talk to the different lenders because when you say no money down, it's not really no money down, it's using other people's money. So if you're going to research and talk to the different lenders, especially the ones that we have here in our conference today, you can pick up information because maybe they can't help you, but they would know somebody who can that they can direct you to that would be able to help you find your right path. So for me, as a baby boomer expert, if you are a senior and you have a home and you have a big equity in your home, then you can leverage on that. That is what I really chant right now is using the equity of your home to leverage so that you can invest in a property by using 1031 exchange, using a reverse mortgage, using combining Prop 121 with a 1031 exchange, and also Prop 6090, where you can take your present taxes right now, your base tax on your present home that you have lived on for the last 30 years and transfer it to the next home that you are going to buy.
You're using
Yes.
a lot of this exchange numbers. Can you actually
Okay, so
the exchange
yes,
programs you're
thank
talking
you.
about?
Yes. So what the 1031 exchange is actually for investment
Yes.
properties. So it's a section of the Internal Revenue Service Code that allows the seller of a real estate to defer the capital gains taxes on the sale of a property if at first, especially it has to be an investment property and it has to be a like-kind property. So all of this, it's a very intricate process. And as a realtor, what I do is I find out first exactly what they are looking for and what they want to do. And I engage a 1031 exchange expert, which is a neutral company that will put together that package for the investor. So what I do is I'm the one that sells the property that they're going to do on a 1031 exchange and look for the replacement property so that they can defer their capital gains. So that's the 1031 exchange. Now, I did have some clients who used the 1031 exchange process where they bought a house, they lived on, okay, and then they also bought investment property. So the investment property, after so many years, they would buy from single family home to fourplex and to a commercial property. So that's a 1031 exchange. So you're deferring whatever money you made from the small single family home to the commercial property. And then all the way to the end, you can actually put that in your trust. And in the end, it can be like a step up, which, when you pass on, the property becomes the value of the property goes to whatever is the market value. So you are saving on your taxes. All these are, of course, it's more intricate, and I cannot do that in about 3 minutes of talk. But I can just tickle your mind about the 1031 exchange, on how to use that as a technique, the reverse mortgage for those who are 62 and over, and the Prop 6090, which is actually for those who are 55 and over. They can move their tax base, the present property tax right now, to a home that is equal or less in value, and enjoy that initial taxes that
Well,
they have
thank you
on
for
the
that.
property. Thank you.
To Yadira and really ask her, on your credit line, do you suggest people
I'm sorry, I didn't catch the whole question. So I know you're asking about the credit line. I didn't get the rest.
when it goes out and take a credit line, that they use that to purchase their second income property or to use it for programs, but can they actually use that to purchase?
Okay, so are you asking if the credit line, if we can use that for a second home or investment? It can be used for both. Yeah, it can be used for those. So if you have enough equity on your home, then you can use it for both.
Information. Before we end this panel, I would like to know from here's I am. I'm trying to pick out a realtor for me to go through this process. What do you recommend? Or help me through my process. What are the best ways to choose a realtor?
Okay, so with Bank of America, you have loan officers available in all our banking centers. Banking centers are open, Monday through Friday and Saturday. So, for those customers that are already doing the banking with Bank of America, they can stop by the bank and ask to speak with a mortgage specialist, and they will be connected with a professional. If there's certain banks that don't have a banking loan officer assigned, but they do have someone that they can talk to with a centralized loan officer. Another way, I always tell my clients, whether they're looking for a realtor or a loan officer, always, by referral.
Yeah.
I think the referrals are great, only because, if you have your close friends or family members, the experience that they had with that lender, with that realtor, I think it's very important. That way they know, they're going to someone that's going to take care of their needs. Another thing is making sure that either it's a realtor or loan officer, that they're doing this full time. We have some realtors or some lending officers that might do it part-time. In this business, you cannot do that part-time. For those that are able to do it, hands up. I don't know how they do it, but definitely making sure that they're full-time. Being available is very important, especially on the weekends. A lot of customers that I have, they're like, oh, well, if I need to get a hold of you on a Saturday or Sunday when, they're in the field looking for properties. How am I going to get a hold of you? I said, trust me, I don't work banking hours. You know, I'm a loan officer. So, you know, making sure that your loan officer, your realtor, you know, they're not working just Monday through Friday, you know, 8 to 5. It's impossible to work that way. So being available, it's very important, and definitely having the experience. Someone that knows how the current market is, and that knows their guidelines, you know, the programs that are available. I think it just makes it a very an easier customer experience. You know, when you're working with someone with experience, available, they do this full time, and more than anything, that they love what they do. I think we're in a, you know, we're one of the few that if you're doing lending, if you're doing real estate, it's because you love what you do. You know, so that's my recommendation.
Thank you for. Okay, thank you for that. We got that. Definitely making sure that we have really good referral process and that they're knowledgeable. So thank you for that. Trying to find a good realtor. What are some of your insights?
Kudos to you, Yadira. I completely agree with you. Make sure that they're not doing it part-time, right? So the basic thing is that obviously if you can get a referral from somebody, that always makes it better. When you do get a referral, you know, you can also Google. Most of us have ratings on Google or Zillow because most of us are getting all surveyed by all of our clients. So you're looking for somebody, if somebody's got a 3-star or 2.5-star review, then they probably aren't very responsive, or they're not passionate about it. So again, to Yadira's point, we do this because we love it. At this point, 35 years into it, I can tell you, those of you listening, I probably could be your mother. And that is, I can't even imagine not doing this after 35 years. But make sure they're listening to you, because you all have a different story. And when you call them in a couple of weeks, if they don't remember your story, they're probably not the person for you. You want to make sure that they're actually paying attention to what you're saying and what your needs are, and why you need a certain home, or why you need to refinance, or what your needs are for moving forward or purchasing an investment property. Are you purchasing it for a family member? If you're purchasing it for a family member, a lot of times we can call it owner occupied if we can show that you have a family member moving in. So we need to know your story, but make sure that they're listening to your story. Same with a realtor. If a realtor is too busy to take you out and show you property, then they're probably not driven enough to do that. I can tell by SB's conversations, she's passionate about what she does. Not only is she a realtor, she also understands the intricacies and the other programs that are available. So you want to look at somebody who actually is going to pay attention to you, listen to your story, and then give you the best advice that they can. And all of us on this panel, some of you are going to connect with one of us and not all of us. There's no right or wrong. You have to feel comfortable and feel like you're building a relationship with that person. Same with your realtor, same with your lender. Make sure they're listening, make sure you're comfortable with them, and make your own opinion.
Well, Karen, that's some great advice. Be passionate, pay attention. Someone has we're about to close out, but I want to make sure that we take some questions from the audience. Get a few questions to give to our panelists from the audience.
Well, just to finish off what you were saying, the same question I think should be asked of SB. What is your opinion on, how you should choose a realtor or a lender?
Well, yes, thank you,
Okay.
Helene. Yeah, I am very passionate with what I'm doing. That's I guess it's very, very obvious with the way I'm talking to you and the way I am telling you. As much as I can, I want to spit out everything that I know, right? So anyway, the most important thing is experience. Experience doesn't have to be like 30 years. Some people are good readers, good researchers, and they have to be a good listener. If you can listen to your client and find out exactly what they are interested on, what they're passionate about, what their goal is, then it's easier for you to research and find out what it is that you can give them or show them, right? So with that, you can be a good coach. The most important thing is that you hear your client first, and then you are a beamer. You can be somebody that can encourage them. Like a first-time home buyer would say, "Oh, I don't have the money." But that's not the end of it. You have to keep on asking questions. The most important thing I ask them is that, do you really want it? If you really want it, if you're passionate, doors open. Okay. And then they open up to you, and then they tell you about their credit and all that. And so if your realtor have a good team of lenders that she works with, professionals that she works with, then that person will be able to serve you better. Because it's not just it's not a cookie cutter, as a lot of people here are saying. We professionals, we treat our clients like in a very personal way, right?
Right.
Correct. I
Well,
have
thank you for that. I appreciate it. It's definitely. Hello?
Okay. I have another question here. It says, can you speak to the affordability gap in Los Angeles for FTHB? Specifically, can you ask the lending team how to access the list of down payment assistance programs? Yadira, do you have an answer for that?
I'm sorry, if the list for what? I'm sorry, can you repeat the question?
Can you please speak to the affordability gap in Los Angeles for FTHB? Specifically, can you ask the lending team how to access the list of down payment assistance programs?
We have as far as the Bank of America program in our website. There's a list of the different programs. So it's called the Real Estate Center, and in there you can find a lot of information about the different programs that we offer. And in addition to that, we have properties that are listed there. You have different realtors that you can access through that through that website. So definitely visit our Bank of America website, and you'll be able to get that information there. It's called the Real Estate Center.
It's on the bankofamerica.com website, and then is there just a tab
Correct.
that is called the Real Estate Center?
Yeah, you can just search the Real Estate Center, Bank of America, and you'll be able to find all the information about all the different programs that we offer there.
And then I have another question from a member here. It says, Ms. Yadira, where can those investment properties be located? Just California or other states? Also, does the 20% have to be seasoned in my account for a certain length of time?
Investment properties, I mean, they can be in all 50 states. I mean, we're able to do, different lenders are able to do loans in different states. So pretty much no matter where they're at, it can be in another out of state as well when it comes to the investment property, because it's for investment anyways. So you can be living in California and buy a property in Nevada. So it's considered an investment property.
Okay. And then I just have a final question, and that's for Karen. And I'm just reading these off. We still have some time. For Karen, it says, I want to purchase a fixer-upper and live in that new remodeled property. What funds are available to me? I have very good credit and low debt to income ratio, but I do have student loans that are all in deferral and will be for the next 4 years while working on an advanced degree.
Some of the student loan programs are actually forgivable, so we'd have to take a look at that. If you're on a graduate payment plan, we can use the lower payment. But if you want to purchase a fixer-upper to live in, we still have to qualify under the standard debt to income ratio requirements. So depending on how much you have to put down, there could be down payment assistance programs available. Yadira just mentioned, and on the earlier call, if you were on the earlier call, Bank of America is offering up to $10,000 for down payment assistance and $7,500 toward closing costs. So I personally do not have that program. So it's my job to be a resource to you, whether I can do it or not. So if I can't do it, I would guide you to somebody who has that program available. If you have money down, you're obviously going to get, in most cases, a lower interest rate. So we'd have to review the whole entire thing. But if you have student loans and you're on a graduated program payment plan, then we can actually use the lower payment and use that to qualify based on what your income is. Is that the question you're asking?
I believe that's the question they were asking. It's in our chat box.
Okay.
And the rest of just so the audience knows, we will be sending out a recording of this event, and then we will also be sending the contact information to each individual panelist, along with some detailed information on some incentives that they are offering currently at the moment. SB, do you want to add anything else?
Yes, I would like to add about that question with regards to that question. So if you are a young guy and you want to start investing in real estate, if you don't own a property yet and you're first-time home buyer, remember, a first-time home buyer is somebody who has not owned a home for the last 3 years. Okay, you don't have to be, if last 3 years you had a home and then you short sale or you sold it, then after 3 years you are a first-time home buyer. You can use programs like FHA, and then FHA program will have different program where you can do a fixer up for repairs. You can do repairs using the FHA loan. So the right lender can guide you and tell you how to do it, and then you can go from one property to another. That's one way of doing it,
SB, please. Have you worked with any?
I'm sorry.
Renee, are you saying something?
Oh, yeah. At this particular, can you use potential income in a multi-unit property to qualify?
Yes, you can. If you're purchasing a 3-unit or a 4-unit, you can use the rental income from the other units to offset your payment. So if you're purchasing for owner occupied, then you can use the rental income from the other units. That's correct.
What if the other units are not currently being rented? Do you guys still?
And one last question.
We would get an appraisal, and then we ask the appraiser to give us an estimated value. They do what's called a rental survey for the area. And if you're moving into it for owner occupied and the other 2 units are empty, then they'll go ahead and give you a rental survey of what the rents would be, and we can use that to offset the payment as well.
Right. Yeah.
Okay. Renee, do you see another question that you want to field out there?
Can you buy a property under a trust?
Any property can be held
under a trust?
I'm sorry, was that for me?
Can you use, I guess they're saying if their money is in a trust, yeah, okay.
Yeah, we can do it if it's in a trust.
The person has to qualify themselves. Renee, the individual, we don't lend to a trust. We lend to the individual, and the property can be held in the trust.
Thank you. How about under a manufactured home? If they buy the land, will Bank of America help? Does anybody work?
if they own the land, we can do manufactured home financing, yes. Bank account also. I don't know if that they're hearing you, Renee.
Thank you. Well, I think that's it for the questions, and I just want to thank everyone for coming on and taking your time and giving us, the community, all this wonderful information. Close us out. And once again, thank you, thank you, thank you. Sonia?
Awesome, wonderful, Renee. Thank you so much. And for all of our panelists, all of our speakers, and for Colleen Witt, our faithful event manager. Thank you all so much for your participation today, all of your participants. We hope that you were able to glean some valuable information to really help you better understand the real estate market in terms of your purchase of first home and different grants and opportunities available, as well as getting into investing and taking your wealth status to the next level. And that is it for our event today. I'd like to just acknowledge our sponsors, without whose help we couldn't have done this. It's our presenting sponsors, Boston Private and Bank of America. Thank you. Our panel sponsors, HSBC Bank and SB Realty, very much appreciated. And our community partner, Ventura County Community Development Corporation, and our media partner, San Fernando Valley Business Journal. Really appreciate everyone's participation and wish you a very happy, healthy, and prosperous day.
Thank you.
Take good care.
Glad to help. Thank you.
Thank you, everybody.
All right. Thank you. Bye-bye.
Thank you. Bye-bye.